In today's video, as the thumbnail suggests, we'll do a detailed comparison between two mid-cap funds which are quite popular in their segment. These funds are SBI Magnum Mid-Cap Fund and PGIM India Mid-Cap Fund, and also try to understand which one is better and in which fund one should invest. So please watch the video till the end. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. So let's start the video with the basic details. First, for SBI Magnum Mid-Cap Fund, the AUM, that is the total asset under management, which is more than 11,100 crores. The expense ratio is 0.91%, which is quite high as compared to other schemes in the category. I have observed that almost all the schemes from SBI are having a above average expense ratio, though this being one of the biggest fund houses in India. With the new expense ratio norms of SEBI, hope this expense ratio comes down. The benchmark index, that is the reference against which the scheme is compared, is Nifty Midcap 150 TRI. Now let's look at the basic details for PGIM India Midcap Fund. Here, the AUM is around 9,000 crores, whereas the expense ratio is 0.42%, which is quite low as compared to other schemes in the category. The benchmark index is Nifty Midcap 150 TRI. Now let's look at the sector-wise allocation. Firstly, for SBI Magnum Midcap Fund, from the table, it is very clear that the fund has the highest allocation to automobiles, followed by capital goods, finance, and chemicals. Now let's look for PGIM India Midcap Fund. Here, the highest allocation is to the financial sector, followed by automobiles and capital goods sector. And when we compare this allocation to the category, it is quite different for both the funds. Now let's check the portfolio allocation. First, for SBI Magnum Midcap Fund. As evident, midcap shares form around 75% of the portfolio, whereas large cap stocks form other 20% of the portfolio, and rest around 5% is allocated to small cap stocks. Here, the portfolio seems not over diversified, with around 61 stocks in the portfolio, and top 10 sectors form around 35% of the portfolio, and top 3 sectors form around 40% of the portfolio. The portfolio turnover is just 11%. Now let's look at the portfolio allocation for PGIM India Midcap Fund. Here, more than 72% is allocated to midcap stocks, whereas large cap stocks form other 27% of the portfolio, and rest, less than 1% is allocated to small cap stocks. The portfolio seems not so diversified, as the portfolio is having 65 stocks, with top 10 stocks contributing to around 30% of the portfolio, whereas top 3 sectors contribute to around 43% of the portfolio. But if you observe, the fund is having a turnover ratio of 110%, which is quite high as compared to SBI, and hence we can conclude that both the funds follow a different investment strategy. Now let's look at the top holdings. Firstly, for SBI Magnum Midcap Fund. As evident, CRISIL and Indian Hotels are the main stocks of the service sector, whereas Schaeffler India and Thermax are the main stocks of the capital goods sector. Cholamandalam Finance and Sundaram Finance are the main stocks of the financial sector, whereas Tube Investment of India is from the automobile sector. Now let's look for PGIM India Midcap Fund. Here, Jubilant Foodworks, that is Domino's Pizza, is the main stock of service sector, whereas Tube Investment is the main stock of the automobile sector. Cholamandalam Finance and HDFC Bank are the main stocks of the financial sector, whereas Timken and Cummins India are the main stocks of capital goods sector. Here, the overlapping between the funds is around 41%, and 2 of the top 10 stocks are common in the portfolio. Hence, I feel due to this higher overlapping, one should not have both the funds in the portfolio. But the question is, are these both funds really that good to have in a portfolio? Let's try to understand in the later part of the video. Now let's look at the fund managers. Firstly, for SBI Magnum Midcap Fund, Ms. Sohini Andani has been managing the fund since January 2013, that is, from the inception of the scheme. Here, this long-standing association of the fund manager with the same scheme is quite positive and an advantage for the scheme. Now let's look for PGIM India Midcap Fund. Here, Mr. Vivek Sharma has been managing the scheme since June 2021 and has been joined by Mr. Puneet Pal in July 2022 and by Mr. Vinay Paharia in April 2023. Earlier, in place of Mr. Vinay Paharia, Mr. Anirudh Naha had been managing the scheme. There has been quite a few changes in the fund manager of the scheme in the due course of time, which can destabilize the performance of the scheme. And this is a thing which investors should always keep in mind. Now let's look at the trailing returns. Firstly, for SBI Magnum Mid Cap Fund. Here, if you observe, the fund is able to beat its index and category for the period 3 years and more, but struggles to beat in last 1 year. This is not a good sign. Surely, 1 year performance should not be a yardstick to judge the performance of a fund, but this is an alarm and the investor should surely keep an eye on the fund's performance. Now let's check for PGIM India Mid Cap Fund. Here also, if you observe, the fund is able to beat its index and category for period 3 years and more, but for period 1 year and less, it has underperformed as compared to its benchmark and the category. From this data, we can conclude that both the funds have been struggling to beat its benchmark and the category in last 1 year. Now let's compare the calendar returns and see how consistent these funds are. Firstly, for SBI Magnum Mid Cap Fund. Here we have data from 2014 to 2022 and also till date for this year, that is 10 years data. Here if you observe, the fund is able to beat its index 7 out of 10 times and the category 6 out of 10 times, which makes the fund consistent in its performance. Now let's look for PGIM India Mid Cap Fund. Here it is able to beat its benchmark 4 out of 10 times and category 3 out of 10 times, which makes this fund not that consistent in its performance. Hence, it can be concluded that SBI is a better consistent fund than PGIM. Now let's also check the SIP returns before checking the rolling returns. Here we have taken monthly SIP of Rs 10,000 for 9 years. Hence, the invested amount after 9 years would be Rs 10,80,000, whereas total corpus of SBI Magnum Mid Cap Fund would be Rs 25,43,000, which translate to 18.31% annualized return. Whereas for PGIM India Mid Cap Fund, it would be 27,60,000, which is 20.51% annualized return. Here, the performance of PGIM India is better than SBI Fund. Now let's quickly check the rolling returns. Here, we will check the rolling returns for 1 year, 3 years and 5 years period and compare it to its index. Firstly, let's see the 1 year rolling returns. From the graph, it is evident that both the funds have been able to beat its index 74% and 61% of times, with SBI having a better average returns and almost same standard deviation. Now let's see for 3 years rolling return. Here also, both the funds have been able to beat its index 71% and 54% of times, with SBI having a little better average returns and almost same volatility. Now let's also check 5 years rolling return. Here also, both the funds are able to beat its index 95% and 71% of times, with both the funds having almost identical average returns and volatility. Hence, from the rolling returns, it can be concluded that both the funds are having good values but not the best in the category, and we won't be able to conclude that which fund is better between the two. Now let's see how the fund performs on risk parameters before concluding what investors should do. Firstly, let's look for SBI Magnum Mid Cap Fund. First one, mean returns, that is the average return in a year, which is 33.76, which is more than both the category average and the benchmark. Here, higher the value is better. Second one, standard deviation, that is a tool to measure how much the return is deviated away from the mean return, which in this case is 14.91 and is less than both the benchmark index and the category average. Here, lower the value is better. Third one, Sharpe ratio, that is a tool to measure the risk adjusted return, which is 1.99, which is more than both the benchmark index and the category average. Here, higher the value is better. Fourth one, beta, that is the volatility of the scheme as compared to the benchmark, which is 0.88, which is lower than the category average. Here, lower the value is better. Fifth one, alpha, that is a tool that measures how much better the fund has performed compared to the category. Here, it is 6.18, which is higher than the category average. Here, higher the value is better. Now let's see for PGIM India Mid Cap Fund. Here, the standard deviation and beta values are not better than the benchmark index and the category, which indicates that the fund is little more volatile than the index and category, but is able to generate better mean returns than SBI Magnum Mid Cap Fund. Now let's see the upside and downside capture ratios. First, for SBI Magnum Mid Cap Fund, the upside capture ratio is the measure of how the fund performed relative to the index during the period when the index rose. Here, the value is 101, which indicates that the fund outperformed 1% more than the index during the rise period. Here, higher the value is better and should generally be more than 100. The downside capture ratio is the measure of how the fund performed relative to the index during the period when the index has dropped. Here, the value is 56, which indicates that the fund declined 56% as compared to the index during the fall period. Here, lower the value is better. Now let's check for PGIM India Mid Cap Fund. Here, the upside capture ratio is 111, which indicates that the fund outperformed 11% more when the index rose, which is better than SBI Mid Cap Fund. Here, the downside ratio is 86, which indicates that the fund declined 86% as compared to the index during the fall period. Here, lower the value is better. On comparing the upside and downside capture ratios for both the funds, one is having a better upside capture ratio, while the other is having a better downside capture ratio. Hence, we cannot conclude which fund has better capture ratios. So now let's see what investors should do. But before suggesting what investors should do, I request all of you that as you have watched the video till now, it seems that the topic is of your interest. Hence, I would request all of you to press the like button and also subscribe to my channel if you have not done till now to watch such interesting videos in future also. So coming back to the conclusion, what investors should do. First, the existing investors. Firstly, let's look for SBI Magnum Mid Cap Fund. The fund's performance has been good in long run. Hence, one can continue their investment in this fund. But the fund has been underperforming since last 1 year. So be a little cautious and keep a close watch on the fund's performance. Same way, for PGIM India Mid Cap Fund, the long-term performance has been good, but in short term, it is underperforming. So one can still continue their investment, but keep an eye on fund's performance. Here, one more thing I would like to add, that the fund manager for PGIM India Mid Cap Fund has been changed since last 3 months. So it would be interesting to see what steps the new fund manager takes to boost the performance of the fund. Second, new investors. I feel that both the funds have an average performance, and if investors has narrowed down the choice of these two funds and want to choose between these two only, then I feel that looking at the performance, risk parameters, and stock portfolio, SBI Magnum Mid Cap Fund is a better choice. Here, one more thing should be noted that almost all mid cap funds have been struggling since last 1 year to beat its benchmark index. What do you feel? Which one should you select? Do share your views and comments in the comment section. Instead of selecting any of the above funds, you can also look at other options like Quant and HDFC Mid Cap Funds. I would like to add that I have PGIM India Mid Cap Fund in my portfolio and will be continuing my investment in this fund. I will again try to review this fund separately after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you have not done till now and also press the like button. Do check my older videos. Click the attached cards to watch these videos. Thank you.